Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The euro plummeted on Tuesday as the US dollar index, also known as the USDXY, which measures the greenback strength against a basket of 6 major pairs, jumped around 0.62%, up to a high around 95.70. This has seen the euro plummet back towards the trend support line seen around 112.70 to 85. With much talk of rate hikes, it is assessed the US dollar index will continue to impact on gold along with the euro, and therefore could see eventually a rate hike in March, with the market now pricing in around 86%. Still, going into now what's known as a blackout ahead of the January meeting next week, recent hawkishness from the FOMC members will likely remain a key focal point amongst market participants, seeing the US dollar upside risk increase. A break of the support levels seen at 112.70 would expose the region of the broader pattern I'm looking at 111, and reassess from there. Looking at the Australian dollar, the market is still maintaining a slightly bearish stance and looking towards the support region of 71.60. A break there will give further exposure down to 70.90, which is where the call is at present. But we still need to tackle this level at 71.60, and if it is breached, then we should see further weakness, with the 60-day moving average now coming in around 72.35.50. After a bullish dragonfly, the market seems to have posted a reversal, with this doji coming in, which is close to a gravestone, and therefore looks back towards the downside in the short term. It is assessed, though, towards the support region of 113.70 may find support, but I feel overall the market should again take a challenge to the upside eventually after the short weakness subsides and looks towards 115.40.50 as a broader target. Sterling weaker into Tuesday's session and now looks closer to the objective to 135.35 to 45, but I'm not bearish. I think this pullback from the broad trend is the secondary outlook before the primary kicks back in, looks back up towards that top side around 137. Short term nearly over to the bear case, and then we could see a bull case coming back very soon. KGN still a little bit choppy, coasting sideways, but still overall looks towards the bottom side of the range. I feel around 90.70 or even down to around that 89.60.80 area, with a cap still seen around 91.80 figure. Gold a little bit weaker as we heading into European session, but still looks very much to that 1,800 mark that needs to be cracked. If we can get a break beneath there, then that would reopen the downside to 1,788, with the base holding at 1,757. As I mentioned earlier, the pressure on gold will continue as the US dollar strengthens. So let's see if the market does fall further into the bear case. Finishing up with oil, the market's reached its objective of $86 a barrel after hitting a high of 86.29 today. I'd rather sit out for the moment because we're overheated on the ADX, and I feel it's time now for a pullback, considering this trend's been going for some time, since late November around 2021, which is around $64 a barrel. So I feel it's now time to see a pullback. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.